All right, traders, we are back again to the different entry models of smart money concept. And today, we'll be talking about the fair value gap. The last video was on order block. Remember, we were talking about the 4 popular entry models for smart money concept. We have the order block, fair value gap, breaker block, and flip zone. So I'm going to be explaining this 4 entry models, but today we'll focus more on FVG. So let's go to the chart, guys. What is fair value gap, or FVG? So this simply means imbalance in the market, where price moves so aggressively in one direction that it left a gap between candles without proper trading activity. Now, this gap often acts as a magnet for price to later retrace into it before continuing. So this move is more of a trend continuation entry. If you want to be catching smart entries with, fair value gap, it happens when the market, is moving aggressively and then a gap appears. Price will most likely come back, tap into that gap, and keep pushing to the upside. This is very popular if you're trading XAU-USD. But then today's video, I'm just going to show you how you can spot valid, fair value gaps that can be very useful when it comes to setting your entries or your POI. So the next question we have here is, why is the fair value gap or FVG important? Now, when the market is moving, it is, proper for both the bull and the bear to have equal movement. But when that doesn't happen, that is when every FVG, gap will create it, on the chart. So the price often returns to fill the gap because the market seeks balance, and traders can anticipate retracement into the FVG for high probability setups. So I will show you guys on the next slide, how to spot this, imbalance.
Because when you are looking at the chart, you may be able to see a lot of them, but then I'm going to show you the one you should focus on, and then how to strategically sit your entries using fair value gap. On how to spot valid fair value gaps, I also have some tips listed here. Now, number 1, the trend matters. It is important you also pay attention to the trend, just like I stated when we were talking about order blocks, because the probability of your trade playing out when you're sticking to the trend is higher than when you are going against the trend. And for the fair value gap, it happens when the momentum is very high. And when the gap happens, the price can just come back, tap in, and keep moving. So that's why you need to pay attention to the trend if you want to catch smart entries using a fair value gap. And then the gap, is created between 3 candlesticks. Now, you can see this is a bullish imbalance, having it in mind that before you start looking for the imbalance, because like I said earlier, price can create a lot of them on the chart. But you need to pay attention to the one that causes the break of structure. So once that break of structure happens, you look out for the 3 candlesticks, before that break of structure. When mapping out, you map out from the first candlestick closing point. You can see it here. So you can see it. So we can see prices push up close here. Now, if the price was moving as it should, it would have covered up the gap. When, this one opened and then from here the price should have covered up the gap. But you can see after this one opened and closed another candlestick, which is the 3rd candlestick. And from there, price continues to shoot to the upside, leaving out this gap here. Gap from the closing point of the first candle to the opening point of the 3rd candle. So the gap between what is called an imbalance, and price will most likely, come back, mitigate the imbalance, and keep pushing to the upside. So have it in mind that the imbalance must create a break of structure. So you should not just see any imbalance and just start setting your entries from there. Pay attention to the trend, and it must also create the break of structure. And then there should also be liquidity. Price will clear before, tapping into the imbalance. Let me also show you guys a bearish structure, because this one is for bullish structure. So this is an example of a bearish imbalance. Just the same thing as the, explanation for the bullish imbalance. So make sure a break of structure is present. And then you look out for the 3 candles, and you map it out from the closing point when it's a sell. You can see it's from the closing point of the first candle, and also be the opening point of the 3rd candle. So the gap in between is what is called imbalance. And prices most likely, come back into this point and, keep pushing. Like I said, before this, happens more on XAUSD. That is if you trade gold. But then remember, trading is risky. All you just need to do is backtest and see if it works for you. And, compare the win rate before you decide, to risk your money. I would also show you guys some of the entries I've been able to catch using FVG. So this is how to place your entries if you want to be taking your trades from FVG. So once that happens, you can see the price retraced, just tap in and continue to the upside. Now, have it in mind that this is more of a trend continuation entry. It happens, very fast. I have experienced that, with XAUSD using this particular entry, as an example.
So once it happens, price may, most likely leave out the order block and just tap into the fair value gap and, start pushing to the upside. And then when setting your stop loss, should be a little bit below FVG. Some traders may want to try to serve two masters at the same time. When you are trying to take trade from FVG, but then you would now drag the stop loss to also accommodate the order block. That will kill the risk to reward ratio of the trade, and you would see that your stop loss is even way more bigger than what you were trying to achieve. So if you're taking your entries with fair value gap, all you just need to do is put your stop loss a little bit below the fair value gap. Just stick to the fair value gap and then wait for price to tap in and then push to your direction. So let me also show you guys a bearish entry that I also caught from XAU USD. All right, traders, this for, bearish entry, just for a sell. You can see once it happens, price will return to the FVG, and it would just more like, how we'll catch entries using order block. But this happens when the momentum is very strong and, price is shooting, aggressively to the downside or to the upside. So once that FVG is created, all you just need to do is patiently wait for, price to get back into that FVG that caused the break of structure. Because now, if you check this particular trade, you would also notice that we have FVG here. And you can see price did not respect this one. It targeted the one very close to the order block. Remember, one of the confirmation, for pointing out valid order block is the FVG that is very close to the order block. And most of the time, price come to that FVG, reacts, and push to the direction. So that why, when you're trying to take entries from FVG, don't just, map out every FVG on the chart. Map out the FVG that caused the break of structure.
The FVG very close to the order block, and patiently wait for price to get there, tap in, and, stop loss a little bit above if you were selling or below if you were buying. And just wait for price to print out the result. So I keep saying this. These works very much on gold. But at the end of the day, apply proper risk management. Remember, no amount of over-analysis or, how beautiful your setup is, that doesn't guarantee profit. So have it in mind that trading, involves risks, and you can also lose your capital. So this is for you to understand how to, strategically position and take your entries with fair value gap. All right, traders, so in our next video, we'll talk about more. I've seen that play out, most of the times on the charts, so I'll show you guys how to strategically position smart entries using SMC strategy. So make sure you subscribe, turn on the notification bell so that you always be the first to be notified. And don't forget to like this video. I'll see you guys on the next video.